It is Thursday, June 1st, 2017. Market just closed a couple of minutes ago. The account value is at 118K and a little something. I am still long Tesla. Bought yesterday 348 shares. I paid $339.75 for it. So the position is slightly green by 200 bucks right now. We have exactly 7 months left in the year. And I think there's plenty of time to show those wolves out there that we can kick some serious butt. So I decided to go full-time on herd alerts. I will spend 100% of my time managing this portfolio and then communicating that to you guys. And with that come a few changes. In the past, I've focused a lot on gold miners, and there's just not much action right now. And because of that, our holding period was too long, and in order to take full advantage of compounded returns, we need to have sufficient turnover. So whenever we have a vehicle that we can make a profit in, we take it, then we move into the next vehicle and let compounded returns to do the heavy lifting, because we don't need to hit home runs. We just need to hit singles and then reinvest the profits of the previous trade, and then the account will grow over time. Compounded returns is the most important concept if we want to generate wealth. The second pillar herd alerts is going to be based on is understanding variance. In the very short term, stock movements are random, and we want to take advantage of this randomness. And what I mean by that is, if we have a fundamental thesis on a specific vehicle, we take advantage when price randomly moves down and we buy that dip. But we also want to take advantage of the variance when it goes in our favor. So if we have a position and then there is a random up move, we will take that one and move on to the next vehicle. So that's a very important concept. We buy dips and we sell rips, and we take advantage of the randomness in vehicles that we want to buy or that we are currently in. On top of that, I will add a page to Sheep on Wall Street where I document the closing price of the account each day, where I list the ticker that we currently own if we are not 100% in cash, the closing price, how many shares we own, so how much that total value is of that position, plus what is left in cash in the account. And I will do that every day, and so that we can create a curve, because I'm taking this now really seriously. To me, June 1st is where it kicks in gear, and I want to be accountable for that. So the entire purpose of herd alerts is I want to provide value, and if I can't do that, then there is no purpose in doing this. So I take this very, very seriously, and I will work incredibly hard to do everything I can, and I will admit when I do mistakes. And I've been trading for 20 years, and I'm still making mistakes. It is a never-ending learning experience, and my hope is that we learn together, because the market is constantly changing, and because of that, we have to constantly adapt to the market. So let me summarize what to expect from herd alerts. We are looking every day for a vehicle that gives us the best odds of positive returns the next day or two. And there is a big difference in positive returns or the biggest returns. We are not focusing on what could be the biggest mover. We are looking for vehicles that give us the best risk reward with the lowest risk. That is the most important factor there. It is not the potential upside. It is the risk factor. Because we sheep, we ain't afraid of wolves, but we are afraid of drawdowns, because the drawdown is the enemy of compounded returns. It's exactly the same force that causes the decay in leveraged ETFs. And I'm not even sure if decay is the correct word to describe it, because all what it is that process of reinvesting the profits or losses of the previous day. Leveraged ETFs can have positive decay, and what that is exactly what we are trying to generate. We want to make profits and reinvest those profits. So if you have consecutive up days in an underlying vehicle and you have a leveraged ETF on top of that, it will do more than the leverage of 3 that the ETF is supposed to have on a daily basis, because it reinvests then the profits of the previous day and then it compounds over time. So we want to take advantage of this concept. We want to take advantage of the randomness of the market. We buy dips, we sell rips, so we will have a lot more trades going forward. And regarding our current position here in Tesla, today was pretty much a non-event. But if I don't get my move tomorrow, I will exit that position because it didn't give me that anticipated move towards 350. And then I'm going to hunt for another vehicle. This approach is also easier mentally because we don't get emotionally attached to a position because we jump into something, look for a quick move. If it doesn't happen, we look for the next one. So it is a lot easier then to keep a cool mindset and not get into this revenge trading kind of thing or regret if we sell something. It's a lot easier mentally, and I think it's the right way. And I'm actually excited. 7 months to kick butt and show those wolves of Wall Street what a sheep can do. That is it for today. I will be back tomorrow with another recap. And remember, we get non-farm payrolls before the open. I expect a strong number simply because that is what the data is telling me. The economy is accelerating. So tomorrow should be fun.